Morning traders, this is the DAX 1 hour chart that we've got in front of us at the moment. I'm going to talk you through my morning analysis this morning. This is Monday the 13th of November. I'm going to take you through my pre-market morning analysis in order to give you an idea as to the type of things that I'm looking at in order to do my day trading a little bit later this morning. So I'm going to take you through the analysis, show you what I look at, show you how I analyse the charts in order to gain an idea for possible entries, possible exits, and in order to gain context over what's been happening in the market previously and context for today's price action. So you can see from the picture in front of you, this is the market since the beginning of September of this year through to today, and the market's been in an uptrend. It's been in an uptrend, and just at the end of last week, the uptrend trend line was broken. Let's just draw that trend line in. So you can see the uptrend. It's gradually been rising over the last few months, and last Thursday, market came down and broke that trend line from above, came back up, hit the trend line from below and dropped. Okay, so that's quite significant. So we're going to be looking at potential short trades today. The market since, let's see, Tuesday the 7th of November, so the last week, it's been in a downtrend on the shorter time frames. We've had rejection of the previous uptrend trend line, and so we're going to assume that the market temporarily at least is in a downtrend. Okay, so we've got an overall idea there of what's going on in the market. Let's see if we can use this particular time frame to draw some horizontal levels in that might be useful for us. So first of all, I'm taking the prior highs, recent highs and recent lows in order to draw some horizontal lines in here. So picking out the different relevant highs and lows. The ones that I can see obviously on the 1 hour time frame, and then we'll go down to a lower time frame. Okay, so you can see at the moment we're on the right of the chart here, and the market is contained within a range. Here's the high of the range currently, and here's the low of the range at this level here. It's quite a large range, 100 points there, so probably need to go down into a lower time frame, do a bit more analysis and see in a little bit more detail what's been going on in the market. So we're going to go down to the 5-minute time frame now. So this is the 5-minute chart that we've got in front of us now, and you can see these are the lines that were drawn on, that I drew on the 1 hour time frame. Still there on the 5-minute time frame. There's the old trend line that was hit from below, and we've got our support and resistance, horizontal support and resistance levels drawn on as well. And you can see that the market's been in a range from the end of the day pretty much on Friday through the weekend up until where we are here first thing this morning. So it's been contained within this range here. As always, when I'm trading indices, the FTSE, the DAX, I'm going to be looking to see first of all what happens whilst the market is within this range here. Assuming that it opens within this range, where's it going to go? Is it going to break out higher? Is it going to dip down to the bottom and break out lower? Or is it going to be contained within this range? So that's the pre-market analysis. Let's see what happens, and I'll come back to you a little bit later on. And so this is what happened. This is the first 3 hours of trading this morning. And so what you can actually see here, this is the 1 minute chart. This is my trading time frame, the trading time frame that I used this morning, and the trading time frame that I use most mornings for the first couple of hours. The DAX is a fast moving market. It's got a lot of volatility, and therefore the candlesticks on the 1 minute chart do actually make sense. And you can interpret them in terms of psychology, you can interpret them in terms of supply and demand, and that's what you need to do in order to be able to take good risk to reward trades. So let's have a look at what actually happened. So you can see that this is the pre-market range, the grey box that I drew in earlier on the 5-minute chart, and these are the other two support and resistance levels as well. So I was looking to see what happened when the market got to the top of this range. Would it break out higher, or would it come back down into this range, and what would therefore happen then? And you can see that the market tried to break out higher and came down, and then it broke out lower and zoomed down out of our little pre-market range. So what have we got within the price action then? What sort of content have we got within the candlesticks in order for us to be able to look at trades to take? And you can see that what I've drawn in here is that these blue lines here denote or depict a wedge. And this is a broadening wedge, and it's a right angled broadening wedge. So it's got a level lower limit and a sloping and upsloping upward trend line, or barrier if you like, to the wedge. So with this type of chart pattern, basically what you're looking for is, does it happen in a good context area? Well, it's taking place right at the top of a channel that we've already identified, a range that we've already identified as being important. So we're looking for what sort of signals do we get within this broadening wedge that say the market is going to go down back within our range and probably down to the bottom of the range. Okay, so with this type of pattern, you're looking for the third touch to the top trend line, or the top barrier of the wedge. You're looking for the third touch, and you're looking to say, okay, 1, 2, 3. So at the third touch, so we've been able to draw this pattern in because you've had a touch here, 1, 2, and you've had touches here, 3 touches at the bottom. So you're looking to say, okay, I'm looking at this point in time, I'm looking for what have I got within these candlesticks that tell me that we are rejecting higher prices and the price action is going to take us down to the bottom, first of all, of this wedge pattern. Well, we got rejection, we've got spikes here, a spike here, and when we get this spike here, then effectively the trade opportunity is on. It was followed then by an engulfing candlestick, this red candlestick here, and hopefully you can see it. This is an engulfing candlestick. It's bigger than all of the bars prior to it, and it's bearish. It's red and it's bearish. Okay, so my trading strategy, this particular system, takes me in when the market breaks the low of this particular candle, and it did that on the next candlestick. So we had a pause, and then the market started falling again. The stop for this particular trade is just above the high of the pattern. So if the market was to come up here, then it would take me out for a loss. And we're initially looking for a trade down to the bottom of the range. Okay, so that's the first target. The first target would be the bottom of this range, and you can see that within 5 minutes or so the market had come down to the bottom of the range. So we're taking 75% of the money off the table when the market hits the bottom here. And the reason that you do that is because, of course, you've had reactions here, here and here to the bottom of the wedge, and we may get another reaction here which takes the market back up here. And on this occasion, we didn't get that. We got the market dropped down below the wedge, came up, hit the lower limit of the wedge, and hopefully you're beginning to see a pattern in what's happening with and what happens with the market at support and resistance levels here. Breaks the barrier, comes back up, touches the barrier, rejects, you can see this great big spike here, and drops down again. So at this point in time, when you've got rejection here, you've got 25% of your money from the original trade left on the table, and the chances are, because we're in a trading range here, lower limit, higher limit, the chances are that the market's going to test the lower limit of this range. So it came down, went back up, and met the lower limit of the trading range. So that was the second target for that particular trade taken out. Out of interest, you've got a double top here, first high, second high, slight dip in between, so traders will have been going short when the market came down to this level here, below this area. Market came down and extra traders come in, trading this double top here, and that propelled prices down to the bottom of the trading range. So extra confluence, if you like, extra momentum gained because of this chart pattern within the trading range. Okay, I was already in the trade, 25% of my money left on the table at this point in time. Didn't add to it on this occasion, and I could have done, and it would have worked out really well. Then the market bounced around at the bottom of our trading range, and you can see that I've drawn in here a triangle. So this is a right angle triangle, and the market prices are effectively compressing down. They're compressing down, compressing down, compressing down. And as I said earlier, we're favouring downward momentum in the market. The chances are that, and if I'm going to take a trade, I'm going to take a trade short. I'm going to bet on the market coming out of this trading range and descending. And what happened? Well, the market dropped out of the range, and you can see at this point in time the lows were at this level here, came down to the lows and then bounced up and immediately rejected down. Okay, so as we did, as happened here, the market came up, touched the bottom of the wedge, came down. And as it did previously on the longer time frame chart, it came down through the uptrend trend line and then bounced up and hit the trend line from below and then came down. And the same thing, as you can see, occurred here. And so when this bar here appeared, you can tell that prices are going low. I didn't take this trade. I didn't take the market lower from here, and the reason for that is because you've got an important 100 level, round number level here, 13,100, and so you'd be trading straight into that round number, and also this low here. It would have worked out, but I didn't take that. The next trade that I did take was generated by the price action below 13,100. So the market came down, it hit our support level here, support and resistance level here, and it came up. It came up and it didn't make the 13,100. It started rejecting, small candlestick bars, all compressing the price action. And so you're waiting to see what happens. You've got rejection at the bottoms here, rejection at the bottoms here, and you've got rejection at the tops of the candlesticks as well. Rejection here, 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 all rejecting. We've got two moving averages on the chart as well. We've got an 8 exponential moving average and a 20 exponential moving average, and they're compressing, they're helping compress prices down within this little boxed area here. When you see that, and the market's already down for the day and it's in a downtrend, then you just need to see some good candlestick action, some good price action, and you've got a valid trade. And so what actually happened was we got a big engulfing candlestick out of this particular range here. The next candlestick, you can see, just see as a green candlestick, it went up, touched the bottom of our range and broke lower. And we got two very small bars here, and then that was it. And then the buyers gave up for a period of time. And so I entered into my short trade, my next short trade after this, the second very small bar had closed here after the market came down and broke the low to that particular bar. Small risk, because my risk was up here just above these two doji bars, and the market came down, and within 2 minutes it had come down almost 30 points. So very small risk, quite a large reward on that particular trade. So I hope that you've found some use out of that. That's how to do early morning price action analysis to judge the context for your trades, pre-market analysis. That's how to analyze price action on the 1 minute chart to say, okay, what sort of content have we got? What chart patterns have we got? What content within the candlesticks have we got that fit my trading plan in order to take good risk and reward trades? We've got a right angle wedge here and a right angle triangle here, and 2 excellent trades. Hope you found that useful. My name's Anthony Beardsall. If you want to learn to trade, then I'd love to teach you. We've got a website at excellenceassured.com which is full of information for you, and we've got 2 trading courses for you. One is a day trading and a swing trading course where you can learn all the basics of trading and also some advanced price action as well. And we've got a Forex trading course for those of you who are interested in trading Forex markets. So take a look at excellenceassured.com and subscribe to this channel. There are more of these type of videos on the way. Thanks for joining me. Hope you found that of use, and I'll catch you on the next video.